Okay guys, so here we are again on the live trade right here, and again I didn't take this trade. I am more on synthetic indices than on forex market. So we have sell stops. So you can like keep back testing all this again and again. It's still the same process, the same stuff. Like I always say, same stuff done again and again. And I will explain right here where we have an Asian high and we have an Asian low. Now the Asian high was first taken out right here during the London session. So during the London session we have a stop hunt right here, London Q zone taking out the Asian low. So Asian high taken out, so we're having a breakout structure, and we are also having a hunt on this high. So we grab liquidity there also. Now trading the association London and New York, you know, when the London take out the association, we see a retracement, ultimate trade entry, and we'll be targeting this high right here as a take profit for a scalp. But me, I could also targeting this old Asian high resting right here that we have on Monday right there. And Monday usually equals, we usually get to see Monday create the low of the week, and Tuesday probably the high of the week, or Thursday should be the high of the week. And you know, the previous trade I took, you know, I took it right here, the analysis we did together, the live trade analysis, it was taken right here, right? And we see how it's marked the buy side liquidity pool that I said we take profits, we have to run to, and we see how it's marked that, and we have a new high, which is also the Asian range. If you use this indicator, you identify your Asian range. No need of you to check your time and stuff like that. Just use the indicator, you will see your Asian session right there. So we have the Asian range right here. So now Asian high was taken out. Put this back again. Asian high was taken out. Asian low was taken out. The whole of this that we have is an order block right there. Now I've seen my order block. I have to refine. So I keep running down to lower time frame to find an entry, and that is where I get to see my KMTR. If you observe, we are inside an Asian session right there, and we know most traders, we know this is an order block, and it fails, right? Price trading lower, and we see the Asian low taken out, maybe behind the supply inside the Asian, and we see it be taken out also, and taking out Asian high. And then running down to the 5 minutes time frame, you can actually see right there. So I marked that as a KMTR, and we have that whole order block right there. And the 5 minutes, there is the little consolidation that occur before the structural break. So we are having an area of demand at that area right there. Now we have seen the price trade higher after it tapped our order block. Now we are left with what? A fair value gap. So now we have a fair value gap. I could like mark the 50% of the fair value gap to see if we get to see a trade lower, like 50%, and then my seed trade higher to our target, which is an old Asian high that was created on Monday right there. So now we have the fair value gap right there. We can still want, it might still want to trade lower to completely close the gap. So 3 minutes time frame, like we can refine 3 minutes time frame, say this is the fair value gap right here, right? And we can see that a supply inside our range right here was violated. So it could be possible we see trade lower, fill the fair value gap, and we continue going higher, right? So we are now on the 1 minute time frame, the fair value gap right here, and we have small little order block right there. You could like want to trade there on New York, and we see it wants to go higher. So we are seeing it trading higher. You can take first profit at this liquidity resting on this high, and you can leave the market. You have traded your session, London session, probably New York. You might see a reversal or retracement, and then we get to see an expansion to Monday high. So that's how the analysis has been, and right here you can see the gap imbalance right there between these two right here. So we're having a gap right there on the London session. So fair value gap right here. Then I mark the 50% right there. So we actually get to see what will happen on the New York and how price will deliver this market. So London take profit on this high, might see a retracement to fill the fair value gap, the broad structure, and then we see trade higher to a sensation. So I'll pause the video, and yeah, if it plays out, I'll post. If it did not, I'll also post. So yeah, guys, and you can backtest. You can backtest all this stuff, and yeah, you know what works for you. So we see how it goes. Yeah. Okay, guys, so we're back again. Same stuff, repeat again and again. Same stuff again and again. I mean, why won't you be profitable with this stuff, man? Like, come on, guys. This is like the third time I'm talking about this, and I've talked about it multiple times on my Facebook page. Like, come on, guys. Like, you sorry about that. Like, you actually see that clean delivery, and we actually discussed about it on our page. Sorry, on my chat. So I'll just show you all the screenshots that we did together. So I think it started from here. No. No. Okay. So it started from here when we did analysis, and I was saying target this Asian high is an old high. We're having liquidity resistance here, and that is a Monday high. So there's liquidity here, and Tuesday tends to create the high of the week, or Tuesday up to Thursday. Monday for low of the week, and you know the first one we took right here was here Monday. Then we're now on Tuesday. We don't trade Mondays, right? Monday is to give us the bias to create liquidity for us to trade on Tuesday. Now the same stuff repeat again and again. Like, look at this. We have the Asian taken out. The first one that was taken out was low, and we now see break structure taking out the Asian high. Before you have to trade this, you have to wait for the both sides to be taken out. Okay. Now the first one that was taken out is the area where you have to find your order block. Okay, and the bias in GBP is that it is bullish. I've talked about this long time ago, last year. So most of them in my group know I've talked about it, where I say do not that area on supply where they wanted to sell before, they should not sell the area to hit stop loss, and they saw it happen, and that was the time the pounds went bullish. So same stuff again and again. It shall be taken out. First one was low, then we'll wait for the other one to be taken out, in which we saw right here on the London session. Then we now have another block left behind, the last set candle, and now wait for the price to reverse, mitigate the area, and we'll see it, well, to expect it to go higher and to take out the Asian high. Alright, so based on more focus on synthetic pairs, I'm just trying to buy share setup on currency pairs. The last time I traded currency pairs was last 2 months. November was the last time I traded currency pairs. I haven't touched currency pairs since then. I've been on synthetic because it's more volatile and stuff like that. So we have a proof right here. Analysis done before that. We do the analysis on New York, and here is this sweet delivery. Like, the price didn't even come back to the fair value gap, so it's fine with that. So if you are scalping, you take your profit right here, and for a lot day trading, you target this high. We have liquidity right on that high, and we now see the price on the New York. I think so. New York. Let me check the indicator. I don't actually use time. I actually use this stuff. So right here, let me just set the colors, and I increase the color of this one. And it's not good for the eye also. I don't just use it to check my sessions. So I increase the color of this one to change it to blue. Alright, so we are still on London. It is still a London session right there. It's still London session because New York is the blue one. So right there on the London took out Asian low, took out Asian high. We have to see a reversal after we see it take this internal range high, short-term high. Then we see pullback, tap about the block, and rally profits. I don't know if any of them took it at the group, but we discussed about it. So right here I was entering at KMTR, and my stop loss was below the 5 minutes of the block, the 5 minutes demand right here below, right there, because like I said, it is a little consolidation that occurred before the structural break. So the stop loss was below there. I enter at the KMTR, but you can just enter at the beginning of the 5 minutes of the block that we have right here, and it was a clean sniper right there. So it tap let me take this off. So it tap our area. Also I have KMT out, so I'm taking this KMT out back to where it is, back to where you are. So we have KMT out right there, and the demand that broke the structure was right here. Okay, that's the area of other block, the 5 minutes right here. So if I had the sniper entry, I will like take it from there and then targeting that old Asian high, right? So I don't know how many pips, sorry, so pips, like up to 98 pips, right? So is a good stuff. Like you even use a minimum stop loss. Like I mean, look at that on the 5 minutes, right? Your stops is 0.07%. Your risk reward 11 to 5. So that is just it. Okay. So I've explained it. We have fake out zones, liquidity that you need to grab. Oh, I always have liquidity around your point of interest. So we have a hunt of that liquidity. We tap our area, point of interest, and we now see the price rally right there. So if you can like take it on break even, fine. And then probably on the New York, you will see it take out that area, and I'm at this high right here that it should go for that high. So but let's not be greedy, just day trading, take your profit at this external high that we have right here. Okay, external high. So we take profit there, we leave the market till tomorrow or next time we get to see the same stuff, London session, New York session, then we will be able to trade. I can see it left behind another block right here. So I didn't actually take that on USD because USD has been ranging and it did not give us something. Okay, USD. So real USD did not present any stuff, it just be ranging right here. So it did not give us anything. So if I put on the Asian range stuff, you can see we have Asian range. Then the Asian low was left behind, and we're having just hunt right there. So that was why I did not talk about USD. We did not trade that. So just a range market. So I hope this is helpful and understandable. So yeah, see you guys later on. Make sure you subscribe, you like, you drop a comment, share your idea with me. I would love, that's how we learn. We share ideas. And then follow my Facebook page also, Trans FX Trader. Yeah, thank you guys. Later on.